Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what happened today. And pretty wild day for Tesla, and we'll just discuss all of it, give you my thoughts as usual. And yeah, so if you enjoyed the video, don't forget to hit the like button. This is not financial advice. I am not a financial advisor. My membership on YouTube, of course, is live. The link is down below. If you're interested, for $2.99 a month, you get access to all my posts, updates, intraday thoughts, options flow on Tesla, technical analysis updates, etc. Pretty much throughout the day, right? I mean, we were talking about it all morning today. I was talking about how we're rallying, but it was looking pretty decent. But I was talking about, I think it was here, right at the 183-ish resistance and a huge volume profile as well. But interesting to see how it reacts to this point. And I think it did. Well, it reacted, that's for sure. It absolutely did react. Now, let's just talk about it, right? So what does this all mean for Tesla, and what happened today, really? And if you enjoyed, by the way, don't forget to hit that like button. But yeah, so Tesla still up in the day, obviously up about 3% on the day, closing at $177.7 per share. So despite that absolutely atrocious looking daily candle, it's still up on the day with a nice gap up pre-morning. But we pretty much faded pretty much all of the gains that were gained intraday today, and we pretty much closed lower than where we even opened. So that's interesting to note. Compared to the market, of course, itself, let's go ahead and take a quick look at how we did compared to the market. The market was a little bit in the red today, right? 0.2% SPY, 0.3% QQQ. So Tesla was still outperformance, but that was only because of the gap up, right? On the news that I think it was Italy wants Tesla to make a factory there, though I don't see how we can gap up on that. I think that was kind of known already. But I think the main thing was the fact that FSD is essentially going to be giving, or Elon said, everyone that is eligible will get a 1-month FSD trial, which I'm excited for. Hopefully I get that in Canada. But also how new cars will now pretty much get like FSD pre-installed, or they have to the employees have to show customers before they actually take their car how good FSD is, something like that. It was a little confusing as to really did you just get it for free? I mean, I doubt it, obviously. But anyway, FSD news is essentially what gapped Tesla up, and I'm sure there's a bit of a FOMO situation happening here on Tesla. Now, let's talk about, without any of the drawings first, let's just talk about the most simplistic version of the chart. What does this mean? What are we seeing? There's three things on this chart right now that we're seeing, and let's talk about what they actually mean. So first and foremost, let's talk about the daily candle, which is going to be not the best looking daily candle. Let's just say that. This is a pretty hideous looking daily candle. It is a shooting star daily candle. Now, what a shooting star essentially means is usually you get a massive gap up, you get a massive push up, and then throughout the day, you just pretty much give up pretty much all those gains, and with an absolutely astronomical looking wick like this, which is essentially what we have here, and you pretty much end at close to the lows of the day / roughly where it actually opened to start the day off in general, which is exactly what we did, right? Pretty much looks exactly like this. Now, granted, this candle itself by itself doesn't mean much, right? What it actually means is if we have a red day tomorrow, especially if it's a gap down to start the day and it continues to be kind of a red day or not a bullish day tomorrow, that most likely then just triggers this candle. But this candle is kind of like a warning shot. It's like a warning shot saying, be careful. This is pretty bad. This can be a lot worse depending on tomorrow, how the stock reacts to tomorrow's price action, essentially. So tomorrow will be pretty important, but not a good look here. Not a good look here. I mean, again, it's happening off of a rally, right? We did get a beautiful rally. I mean, technically from the lows of Friday, which is where I was selling my cash secure puts. I did sell some cash secure puts yesterday. I did take a small loss today on trading this. I didn't think it would, I really didn't think it would give up all the gains like this. This is a lot more than I expected. So I took a small L today, but thankfully my cover calls covered a good portion of that loss, but very small L, like nothing, like $100, but it is what it is. But let's talk about this. What am I looking for? I'm looking for this here, right? From the last Friday, from the lowest point to the highest point today, it is up about what is this? 10%, almost 11%, right? Which on a 3-day rally, essentially. So if you bought the low of the day on Friday and you sold the high of the day today, congratulations. That's 10% in 3 trading days. That's phenomenal. So again, this is happening on technically a short-term uptrend, right? So it's spooky. This is definitely not a good look, right? So tomorrow will be pretty crucial to see how the market and Tesla performs, but this is definitely not a good start for Tesla. So I would not be surprised if we come out down. So this is where we bring back the drawings, come down to, I'll bring it back soon actually, to about 175, and I'll talk about why soon. The next thing I want to talk about are, of course, the two lines, right? The 13 EMA, which is the red one, and the 5 EMA, which is the green one, which essentially just shows trajectory, like momentum, like what's the current direction, if you will, of the stock, right? When the green is below the red, that means the trajectory is still bearish. And today, you can see, even after this move up, it's still well below the red. Now, granted, when we were near the top of the day, close to this 183, 184 level, we did actually It was actually, the green was pretty much right on top of the red. It obviously reacted accordingly because we did sell off the rest of the day, but it was actually almost crossing. It didn't cross, but it would almost crossing. I think I actually have a screenshot. Yeah, this one right here. If you open up the screenshot, you can't really see it super well, but if you look at that screenshot closely, maybe I can like, I don't know, it's just, you can kind of see it. When you open it like this is bad, but you can kind of see it. Hopefully you can kind of get an idea here. It was pretty much on top of it. It was very close to crossing, but it didn't quite cross just yet. So keep that in mind, right? That's number two. The next thing I want to talk about are these kind of, green and red circles. These are called fair value gaps, right? Essentially, when a massive price action like this happens, essentially on a massive candle, right? You usually take the wick from the bottom of the wick from the previous candle, in this case, because we went down, right? The bottom here, and you take the top of this wick and it creates a fair value gap. And more often than not, what happens is at some point, it doesn't have to be right away. It could take some time, but the stock will at some point most likely come back to about to kind of like fill this fair value gap, usually somewhere around the middle of the fair value gap. So for instance, we still have one up here sitting at 192, which means, to me at least, we most likely at some point will come up there to fill this. But we also have a fresh one down here, pretty much sitting at 174/5-ish, which is right under us, which also can mean that tomorrow even we can come down and potentially, GameStop reporting, I'm kind of curious. Ooh, down 17%, crazy. Anyway, potentially come down to fill this gap right over here, which, around that 174.5 area, which again, would essentially, in my opinion, fill this fair value gap. So those are the things I'll be looking at moving to tomorrow. Now, another reason why I like this 174/5 level, if I go here, it's a little messy. I have too many lines here right now because there's a lot of things I'm paying attention to, but it's messy. Let me take away these lines for now, please. So it's a little bit, hopefully less messy, and I'll take away the fair value gaps for now. So it's at least somewhat readable. So first, we came up to right around this 183 level, right? Which is a level that, we got rejected over here, the level that was pretty much support all the way around back here-ish, right? And we rejected pretty much right at that general level. That's number one. Number two, we are potentially in this little ascending channel on the daily chart, right? Which, again, can potentially be a massive bear flag, right? Kind of similar to how we had this massive bear flag over here. Remember, we had this massive fall right here. We had this massive bear flag not that long ago, and then we continued down even lower once we broke down from it like this, right? Remember that? We're kind of setting up like a mini version of that, like a smaller version of that, where again, we recently-ish, after we played out this bear flag, massive fall down, right? And then now we're essentially setting up what could be, again, it's not guaranteed, but it could be, it is a bear flag. It doesn't have to play out to the downside. So, we're in a bit of a pickle here. Let's just say that. Definitely a little bit of a pickle here. So, and this candle today is not helping that situation. Now, the next thing I'm not a huge fan of is the fact that, again, the candle itself is hideous. We didn't close actually above this, what level was this exactly? Yesterday's high, right? Which was, not yesterday, sorry, last week's high, 178.18. Remember that level I kept talking about, how I want to see it push back above this level, and that should be pretty bullish? Well, we did. Unfortunately, we didn't close above that level, at least so far today, right? So this is going to be a pretty important level to watch pretty much for the remainder of the week. Can we actually close above the high of last week's candle, like the high of last week's candle? Can this week's candle close above that? That would be good. That would actually be potentially bullish. Now, obviously, with the catalyst coming out next week, Tuesday, which is, of course, the earnings report, which we'll talk about soon. I have a bit of almost like a theory. It could be a little bit scary. That could be a little bit concerning because that can be something like a catalyst that pushes Tesla down. For instance, let's just take a look at GameStop as an example here. GameStop just reported earnings. It's down 15%, right? But it pushed up substantially yesterday and even today. It doesn't mean that it's going to continue following through on a major catalyst coming up, like earnings or like a delivery numbers for Tesla, which is not as big as earnings, but it suggests what the earnings could look like. So it's like a mini earnings, right? If that makes sense. So take that into account, right? Just because we're pushing up into what, the delivery report, which is again next week, Tuesday, it doesn't mean that it's bullish. This could just be a liquidity trap. This could be just, a bull trap. Just make sure you understand that. Now, the next thing I want to talk about is, of course, this horizontal kind of, level right here, right? With the 175-ish level, which again, back here acted as a support, back here, not too long ago, just recently, really, acted as a resistance. Now, with this kind of candle, honestly, it wouldn't completely shock me if tomorrow, potentially even, we come back down to about this 175, give or take, of course, level, and retest that. Ideally, we want that to hold. As a bull, you want that to hold. As a bear, you absolutely want that to completely and utterly fall apart, and just you want it to crash well below that, of course, as well. But as a bull, coming back down into it, in theory, it should be a bullish retest. In theory, of course, things can change. Again, especially with the catalyst on Tuesday, it's, take things with a bit of a grain of salt here. It's a bit of a risky trade here with that coming out next Tuesday. But the ideal scenario, just strictly through technical analysis, right? you know, coming back down and retesting this area once again, this time from above to down below, which should be now a support, should be a good thing, should be bullish. It should act as a support, and we should bounce off of it and move up even higher after that. That is like the ideal scenario. That is what the expected outcome is. Will it actually happen? Nobody knows. We'll, of course, take it level by level and price by price, day by day, etc. But that's kind of the situation, you know, we kind of find ourselves in, right? It's a bit of a pickle. And again, the only reason I find this a bit of an issue is mainly because we have that delivery report coming out next Tuesday, which I don't think is going to be very, very good. But again, we'll see how that plays out. Now, that's the main way I'm looking at it. Now, with that being said, though, the MACD is still flipping bullish. The MACD still looks pretty decent. But again, there have been false flags before. For instance, it had a false flag break down over here, right? All the way back here, the MACD did flip bullish a little bit right here. You can see, right? It flipped bullish. We had a nice little bit of a rally, and then we just completely and utterly crashed on a gap down on earnings. Also, a bit of a false flag as well. So, you know, the MACD flipping bullish here is great, but again, you know, it can be a false flag. It can be essentially a bull trap in this case, right? Just again, it's not the only thing that matters, but you know, it's still a good sign overall for the bulls. Now, again, if the delivery report wasn't coming out next Tuesday, I would be looking at this and I'd be like, yeah, come down to 175, most likely buy that, most likely successfully retest that, and most likely push even higher. That would be the expected outcome. But again, with that report coming out, it's anyone's guess in all honesty. But that's the main thing I'm looking at right now. Again, absolutely hideous looking candle today. We'll see how tomorrow opens up and see how tomorrow, you know, actually plays out. But yeah, pretty ugly candle. So we'll see. Options flow overall, pretty mixed, but definitely some bullishness coming in, especially in the morning, right? You can see 1.1 million, 1.3 million, 1.3 million for next week, right? But for all we know, they could have taken profits already because they opened it up right in the morning. And then Tesla did rally up like another 3 to 4% throughout the day, which, I mean, just off these calls alone, they would have been up, I don't know, maybe 20% just off that alone. So, you know, they most likely took profits on that already. At least that's my guess. I'd be surprised if they didn't with such short-term options. Now, you know, we have a 1.3 million call over here. It is a 220 strike for November 15th of this year above the ask that came in at 1105. So that's pretty bullish, right? Doesn't mean it has to play out. Doesn't mean it's accurate. But, you know, it could be the thing. I mean, when Tesla was trading, don't forget, when Tesla was trading towards the lower parts of, you know, the range over here in the 160s, we saw a lot of bearish flow, which now is obviously in the water if they're still holding it. So, you know, again, with options, you always want to take it with a grain of salt. It's not perfect, right? You have a 4.1 million call here. It's a $100 strike, unfortunately, for July 19th, but it is a $100 strike. So it's ridiculously in the money. It's like exceptionally in the money. So, you know, even if we have a bit of a drawdown, they pretty much paid for a lot of insurance on this call. So it shouldn't get affected too negatively. You know, if we have a bit of a hiccup, let's just say, over here the next coming days and maybe even weeks, honestly. Anyway, that's kind of the main way I'm looking at it right now, ladies and gentlemen. So, you know, let me know what you think down below. This is a bit of a hideous day, not the best looking thing, right? It could have broken out, right? We have this red downtrend over here that, you know, could have broken out that we kept getting rejected by. And we got rejected by once again, right? Which also kind of lined up with this potential bear flag that we're setting up as well. So not the most ideal scenario, right? The 5 and the 13 still haven't crossed, which isn't great. And of course, we're pretty much dancing right around the mean of the band's reversion line. You know, not really showing too much promise that we really want to push up too much higher and actually hold above the mean, the reversion, the kind of 20-day moving average-ish white line over here in the center. So yeah, it's a very, very complicated situation that we're in because on one hand, it looks kind of bullish where, you know, we did break out and we can come back and retest and we can continue this potential bullish run over here, potentially even back up to, you know, the 190s, the low to mid 190s. That is not, you know, impossible here. But ugly daily candle, major catalyst coming out next Tuesday, which this one can be potentially bad, like pretty bad, and potentially still setting up this bear flag. So very complicated situation. In my opinion, this is a situation where you don't want to get too greedy. Just my opinion, not financial advice, and take it level by level and not go, you know, too crazy, which is what I'm trying to do. So yeah, anyway, thanks for watching. Let me know what you think down below, and I'll see you as usual tomorrow. Peace.